I think we have to start off with just your view when it comes to automobile stocks, auto stocks. I'm not saying that's your wheelhouse, but when you look at the investability of that sector right now with so many surprises, how do you view it?
Well, the main thing is obviously this news has an impact on auto stocks. I think the good thing is we have some clarity now and companies know how to move forward. I think this is a dip. Over the long run, things will get better, but general view, obviously we're seeing the impact now. At least we have clarity. The main thing is, as you mentioned though, auto just one area. The main thing in stocks is to be diversified. So this is just one sector we're looking at.
You know, Sebastian, it's so funny you say that. I thought earlier this week we got clarity when the president said he's going to be a bit more lenient. It turns out maybe he had a change of heart. I want to talk about the markets and also the economy. Ernst & Young out yesterday saying they see a 40% chance of a recession coming up in the next 12 months. I know the economy and market are two different things, but how do you see the economy and how do you see this? A bit of a surprise announcement about auto tariffs when a lot of people thought they were going to be exempt from these April 2nd tariffs. How do you see that impacting the markets?
It's a surprise, but at the same time, in regards to the tariffs, we know this is what we're in the midst of now, and this is what the administration is focusing on. But as it relates to the economy, again, I mentioned it earlier. At least we have some clarity now on auto tariffs, and it's true we have more announcements coming out April 2nd, and we'll see where that goes. But as it relates to the economy, we've started on a good, solid footing. We've seen some of the sentiment data turn negative, and we're paying a close attention to that. But unemployment rates are still low. Consumer spending is actually still there. I want to see where this leads with the market and what the effect on the consumer ultimately is in terms of spending. But so far, numbers are holding up. But we are paying attention to that negative sentiment data.
So you're paying attention to the negative sentiment data, and I know you say numbers may be holding up. We actually hear that from the Fed quite often. They say that the data that comes in doesn't show that weakness, but when we hear from companies in their earnings report, aren't we hearing a lot of warnings about what's coming up ahead, whether it be retailers, the transportation sector, just across the board? Different companies are kind of telling us they're seeing an economic slowdown. They're seeing consumers pulling back. Isn't that concerning for just about every part of the market?
It's a slowdown is always concerning. What's more concerning is a recession, which I don't think that we get into. And that's where I say we've started on a good, solid footing and consumers are still spending. Of course, the policy, the news, the policy announcements, the unclarity on the tariffs, it does create anxiety in the markets, and we're seeing it, and this is a concern. But as it relates to markets, going back to portfolios and staying diversified, I think that's what's important. So it is concerning. We're paying attention to the numbers, but at the same time, I think once we get past this tariff rhetoric, we're going to start hearing, hopefully, impact, more positive impacts. For example, taxes, we still haven't started talking about that, or pro-regulation regime, we haven't started talking about that. So we are concerned right now looking at the data, but I think this clears up. And again, it is important. Are people working? Are people spending money? So so far, so good.
Okay. You also came to us with a stock pick, and you can give us the thesis here very quickly. It's Progressive. Insurance,
Right.
obviously, you pretty much have to spend on it no matter what. Is that the idea here, is that this is potentially recession-proof?
That's exactly it. It's a defensive sector. Progressive in particular, it's an impressive company. They've been growing their earnings, their top line and their earnings at a pretty steady clip, expected 12 to 15% again this year. And you're exactly right. It is a company that even in tough times, even if we are going into a slowdown, we're still paying on insurance. So they do a good job of cross-selling. They have a positive bottom line, and that's expected to continue. So when we build defensive portfolios, Progressive is certainly a name we look at.